Today we are reviewing Rackspace Technology, RXT, ticker symbol. Let's jump across to investing.com and take a look.
Here we are on Rackspace Technology's page here on investing.com, ticker symbol RXT. And so this company, what they do, they're part of the information technology sector. They've been around since 1998, so 28 years old. They're not an AI boom company that's just come around with everything that's going on in AI. They've actually been around for a little bit, and they focus on infrastructure, really. Infrastructure in the cloud and the AI area and building that out. And so that's where their focus is, but they're not one that's just come about with all the craze around AI. Let's look at the numbers. The market is about to close in the New York Stock Exchange. It is the close of business for the 17th of March 2026, and it's currently sitting at $1.78. It's seen a dip today of 17 cents, bringing it down 8.4%. The 52-week range is 39 cents to 274. So you're seeing it sitting at the higher end of that, the top half of that, and which is, if it pushes past that 274, it still has a bit of space to get there. If it pushes past that, you may see a case to go even further and break those bounds. It is a high uncertainty stock rating for investing.com, which for me puts in a speculative category. So if you're going to invest in RXT or Rackspace Technology, then I would suggest you add it as one of your speculative companies, not making it a large portion of your overall portfolio, but maybe a small portion, and just have one or two speculative companies in your portfolio. Okay. You can see there's 3 analysts tracking it. We'll look at that a little bit later. And its performance overall out of 5 is sitting at a 2. So fair performance, not excellent at the number 5. It's kind of below average, and a big portion of that is profitability. Health, a big reason for that. That puts it at the level 2. Let's look to the bearish and bullish signals. There's 2 of each. In the bullish signals, we have a high shareholder yield, which is good, and valuation implies a strong free cash flow yield. So cash flow is good. However, when we look at the bearish signals, we see the stock generally trades with high price volatility. So we're going to see that in a little bit, where there's just lots of movement. I mean, an 8% move down in a single day is a big move. And then it suffers from weak gross profit margins. So while there's good cash flow, the profit margins are not strong. Let's take a look at the charts. So in the past week, it's down 7.6%, and that's not counting the 8% that it's currently down. However, in the past month, it's shot up 329%. That is massive. That's the run it's had, and it's had it all in the past month. So if you got in this thing a month ago, you've done really well, and if you held it through the volatility that it has over a month. In the past 3 months, it is up 73%. In the past year, it is down 7%. In the past 5 years, down 92%. And because it IPO'd about 5 years ago, the 10-year to 5-year chart is fairly similar, down 91%. Wasn't exactly 5 years ago IPO, but it was somewhere around there. So that's the chart. So let's look at the valuations, and then we'll piece all this together. It's a -2 in its price, in its PE ratio, price to earnings ratio, whereas its peers are 11.1 and the sector is 12.1. Its PEG ratio, which incorporates the growth sector, is -0.03, while its peers is 0.08 and the sector is 0.01. And then we'll look at, so the three analysts predict a 2.6% potential gain in the price target, because it's had a massive run up already, and fair value is a 5.9% gain. So looking at this, at the valuations and all of that, and the charts, where it's what's happened in the past month, the bullish to bearish signals, its performance, you could play this as part of your speculative positions, part of your speculative positions. Put a small amount into it of your overall portfolio, so that, because companies do go to zero, but if you put 2% of your overall portfolio into a company like this, then maybe you see some good gains and good returns from it. But if it has a massive hit, you're not getting wiped out. If it goes to zero, your overall portfolio is losing 2% if it goes to zero. And so that would be my recommendation. It's not financial advice. I'm not telling you to invest in this. I don't know your current portfolio. It's now changed to 9.6% down for the day. I don't know your current portfolio position, but if you wanted to invest in something like this, again, just one or two speculative stocks, don't make them large